c'est the team.
Ladies and gentlemen, welcome back. It is Monday, August 5th. We got a little markets and turmoil session on the way. We woke up to a pretty big black swan out of Japan. It started last week and really took shape over the weekend. In the most broad sense, I'm not like the super macro specialist. In the most broad sense, what happened was they raised interest rates quarter basis point for the first time in 20, 25 years. Everyone out in Japan, they leverage themselves up with the yen and they borrow against the yen for other currency, other markets, for example, investing in the US stock market. And now with the rates being raised, they're way over levered for what they have going on and things like that. So it just causes black swan event. Some JP Morgan said something like $20 trillion of leverage needed to be unwound. And that's what the move we're seeing overnight and into markets today. Let me just hop into the charts because we can explain it for days, but today is a day to see these charts. So man, VIX was this morning. We woke up. VIX was sitting around 60, 64 bucks, third highest VIX ever, behind COVID and the GFC, Great Financial Crisis, 08. Pretty crazy that this Japan kind of ripped the VIX as high as it did.
Mm-hmm.
But when these times happen, and then what happened was we got this insane market gap down. We were gapping down like 4% in the SPY. We were gapping down like 5.5% in the Qs. And all right, so now the market has made a shift, a very, very big shift. So this whole move up, this is what I really want our guys to know. This whole move up, huge swing trading environment. You want to buy the dips. You want to leg into positions on pullbacks and add to them on the way up. This is a certifiable top. And then this is a huge unwind of any leverage of all that. So this just completely shifts us out of that swing trading environment to a day trading environment. This is what I really wanted guys to recognize coming into the week. It's like, no swing trading. Do not hold positions overnight. We don't know where we're gapping tomorrow. You want to start fresh. You want to have all your risk going into the day. You want to have all your bullets. And then you want to do the opposite at extremes. When we're gapping down 5%, 6% in the Qs, the only option you have is to look for a buy in the hole or nothing. Those are your two options. You can't look to short. It's just not an option. Just down way too much. The only short, there were two trades today. They were the same trade, just opposite sides of the thing, opposite sides of the spectrum. It's, you look to buy this gap down or you look to short this gap fill. Heaven was telling me he had a great trade in this Google. I'll show you. He was, he waited this open out, missed the up move, and then, perfectly to a T, filled this gap, and he got short here. Nice trade. I didn't trade today, so I don't have any data on myself. I was staring at this Apple off the open. I thought it would rinse a little bit off the open, but here's a 1 minute chart. Let me get the volume out of here. Where is it? We just ripped this open. We pushed down for about 30 seconds and ripped throughout the rest of the day. So and then we gave some back at the close. And do I think the bottom's in? No, absolutely not. I think we're in this environment for a little bit. But just the factors I'm thinking that we really got to hone in on is complete day trading environment. Guys come into everyday flat. You look to short resistance, look to buy support. You do the opposite at extremes. You don't play for a 30% down day or a Black Monday in the S&P when we're walking into 7% down. The only option is to really look to buy in the hole there. What are you thinking over there? That's really it from what I was thinking on the.
I couldn't agree more. I was trying to say this like pretty much this morning. Again, a lot of the brokers, they had like some issues again I couldn't get into my account either. And my first thought was to buy off the open, was like buying through, the 5 minute high in the SPY. Same with the Qs, same with, telecom, VGT, like I wasn't looking at individual names. And days like this, it's like, I want to just trade the indexes because the volatility is already there. Where
Right.
On normal days, like you'd think a month or two ago, like we're never once talking about like buying, the SPY through whatever breakout. But during these times of extreme volatility, it's you have the liquidity there. It's much easier to just trade the bigger indexes and doing the opposite, like I said, of those extremes. So that's what I was posting this morning. When it was gapping down, I'm trying to get into Schwab. I'm like, I just want to buy the Qs. Like we're so far out of
So extended
this.
so quickly. Yeah.
Yeah, it was like this is the aggressive breakdown stage, and we're below, so far below that range where like it just has to kind of catch back up into that, and it could easily still roll back over the next couple of days. But that initial move, like you said, it needs to fill that gap. So I think, a lot of what you said, definitely very true. Again, we were highlighting that newsletter of just not trying to chase, especially like Thursday, Friday, like not looking for those entries just yet. We needed to see more of a shakeout. And it seems like for most of the major markets, most of the major sectors, it's been this April low has been like the area that we want to see get shaken out before there's any significant bounce back. So I think the industrials had like a good example this morning where this is this April low here today. And like, this is what I was writing in the newsletter. It's like, we want to see this shakeout before that next entry. So it shook out today, this support area. And if we want to buy through this high to 235, that's when I look to buy more industrials in this example, like buying back up through here, because we already saw this minor shakeout. And that's just, for like the Dow 30 names are getting crushed right now. I want to see, this area, this April lows get taken out. And that's like that max pain before I'm looking for any longs, more of a swing, not like a day trade aspect, more of like trying to build back into positions right now. Um, Again, the consumer staples, other than today, everything pretty much got beaten up, but the consumer staples have still looked very good, even with everything that's been going on. Pretty much still within, the recent support area. So keeping a very close eye on the consumer staples. There's a few names in that space. We have this CCEP, which is, Coca-Cola subsidiary. Keep an eye, very nice flag doing the same thing consumer staples has been doing. Keep an eye on this, 75, 76 area for this blue sky breakout, the all-time highs. Hershey's, name that we haven't really spoken about probably in like a year or two. Very big base down here. Another consumer staple name. Earnings are out of the way. Didn't have the best earnings, but still, basing out here, for the entire year. So if this pulls back a little bit more, we get that next push back up to this 200 area, keeping a very close eye on that one. And also this STRA, again, name got really beaten up these past couple of days, pulling back into, as I was mentioning, kind of these April lows areas. And if it can, look for a sport buyback, it still needs some time to develop this. It still needs to kind of base out and consolidate sideways. But keeping an eye very closely on the consumer staple names. Again, we're talking about, what's going on with Japan, which kind of set this kind of market off all crazy. And we're just seeing, again, this is an ETF that tracks the Japan index. And
Zoom out. I'm pretty sure. So it just took out. Is it? Yeah. Okay. This year it took out highs from 1997.
mhm,
Just an insane. Like finally, I remember looking at this when it took out the highs for the first time earlier this year. Again, going up to that level, and it's so funny how we took that out. It's all good up until a week ago, and then
mhm,
boom, just dead in a week. They
yeah.
were up. They're up 14% year to date. I think like 10 days ago, and now they're down like 10%.
Mhm. We were talking about this before we even started. In the big picture, I used to track the EWJ to track Japan, and it was like such a dead ETF for so many years. I'm like, I'm done talking about this, like Japan, because like there's not moving. And we took the Japan off like the big picture maybe 3 years ago, and that's like now they finally took out highs, and now they're going to be hated again because they're killing the market.
Yeah.
So yeah, I'm definitely with you. Again, just keeping a very close eye on the staples, and even like telecom today, like telecom, got. Let me go back to a daily here. Um, these are like this morning. It's like there's such a big gap down, like into that support area of this breakdown stage that like if you can pick up any telecom, like this is the time. And it's looking like this maybe is you wrote the lesson on like the wake off like up thrusts. And maybe this is one of those days where it just, maybe this is a new short-term bottom, but we got to take it day by day and see, is this the bottom or do we need to really take out and test these kind of April lows and shake that out. And that's when everyone's panicking and freaking out. And that's when the real buys will happen. Because even, I always take it when I get the random text from, the friends or like associates about the market. That's always like a good time to buy when they're texting me. And I got a few texts today, but nothing that was like, you know, March 2020 where my phone, ringing off the hook. So I'm still keeping more an eye on these April lows. But again, taking it day by day. Maybe this is the short-term bottom. If not, this kind of 490 area is the area I'm keeping a close eye on.
Yeah, I'll give you. Here's kind of what I think is gonna kind of matriculate here. So I still think that we'll have a great like end of the year, October, November, December. Once we get out of this
Hmm.
mess, I got the Q's daily chart up here. We got that nice little bounce at this major support level. The thing is that there is so much resistance in this area. As if we bounce in this area, it's like not a spot you want to look for longs in the slightest. We have
Hmm.
so much overhead resistance. So the most constructive thing would be to like, if we push up and then consolidate and try to push up higher. I would find that very hard to believe given the kind of the severity of this selling.
Hmm.
We'll see. Obviously, like you said, taking a day at a time. But what I kind of think is the path here is kind of just set up this right shoulder a little bit, big head and shoulders forming, and then maybe we take this out on the downside or whatever, and take it from there. But any pops into this area, it's just really really vulnerable for that kind of H move at this point. With this selling,
Hmm.
that's some drastic selling. Um, so I don't think that's gonna be a 1 day wonder, and it's just like, oh, it's over.
Hmm.
We'll see. We came in so much so quickly. And I'll say, that's all I got for the charts. The really good news about this is that it's kind of a Japan black swan. It has nothing really to do with our economy, our US earnings, um, all these huge companies. They're still performing great. Nothing's really, changed on an earnings front or from these companies. The reason I was looking long Apple this morning is because it's like they got so lit up. They were the strongest stock on the board Friday. I know Buffett sold last week, but at the same time, they're gapping down 10% on nothing, for their company. It's I think it's really good news for the future of our market that this doesn't really have to do with our earnings and our situation as much as the Japan situation.
Hmm.
But take this thing a day at a time. I don't think there's much more to cover other than that. You got it. You just gotta drill it into your head. You got to be a day trader in this environment if you're going to trade it, and you have to do the opposite at extremes. If you see the market up 5% tomorrow, don't look to buy that market up 5%. That's a shorting opportunity. Or like, another gap, whatever. Today's gap down, your only option is to either look for the buy or to do nothing. You can't look to short that after it's down,
Yeah.
whatever. That's it. That's all I want to get
No,
across. Anything else?
no, I couldn't agree. That was like, even by the time I got access to my like brokerage account, it was too late. It's like, Qs were up 15 points where I wanted to get in. It's like, I missed
Yeah.
it. It's like,
Yeah,
couldn't get
yeah, yeah.
in. There's like, I can't chase here because tomorrow, if we're down 5%, it's like, I'll be down 5% because it's where we
Yeah,
close.
I was staring at the cues in the pre-market. I wanted to see a little bit of flush off the open, and about 10 minutes before the market opened, it did have like another flush, and it stopped at 420.00, and all this fucking volume came in like right on the button.
Hmm.
And we popped a little bit, came down, but that was the buy right there, and
Hmm.
they didn't really give you much of a chance at the open unless you're buying the opening print, which in hindsight, obviously, shoulda, woulda, coulda, but. Yeah, we'll see what we get tomorrow. No need to trade this environment. You're a swing trader. Just sidestep this until volatility comes down. Reality situation. The VIX closed at 34 today, so volatility is definitely here to stay for a little bit. I don't anticipate this to just go away in a day. So we'll see. We'll take it a day at a time. Other than that, it's August seasonally, one of the weakest times for stocks. Market's looking like a bag of shit. Don't do too much and don't hurt yourself out there. If our whole mantra is to just kill it when it's easy and just sidestep it when it's difficult, yeah, there's a ton of opportunity in this market, But yeah, there's always going to be opportunity. There's also a lot of opportunity to get really, really hurt in this market if you don't know what you're doing. So, with that, any specific questions you guys got for us, please hit us up on the side. Like, comment, subscribe, all that good stuff. But, other than that, catch you guys next week. If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.